Hi, I'm not sure if it's just me, but it seems like this year is flying by. Can you believe that we are already at the end of August and have only 4 months left in this year? Now, let's think about your business. Now, I'm here to talk about your business. I'm here to talk about your business finances, right? Is your home healthcare business on track with meeting its end of year goal? We are in the third quarter, and knowing how your company performed in the first and second quarter can help guide you in forecasting and projecting any changes that may need to be implemented in the third and fourth quarter in order to meet your end of year goal. I'm going to go over 3 items that I review with my clients on a monthly basis to ensure that they are on track to meeting their monthly, their quarterly, and their end of year goals. My name is Shavis Watkins. I'm a financial strategist that specializes in helping home and community service agencies increase revenue and cash flow by 25% with organized accounting and monthly bookkeeping strategies. The first item I review with my clients is their revenue. It is important to compare your month to month revenue as well as your quarterly revenue. Look at the trends. Which month did you meet your goal and which months did you not perform so well? Look into what may have happened that caused you to or not to meet your goal. One reason that can cause a home healthcare business not to perform at its full potential is staffing. It is known that the home healthcare industry can have a high turnover rate. Now, is the high turnover due to the rate in which you're paying your staff? Do you need to increase your patient rates? Do you need to acquire more private pay clients? Do you need to evaluate the insurance companies you're doing business with? Knowing how much revenue your company is generating monthly and quarterly will help you notice trends and know what areas to start evaluating. The second item that I review with my clients is the net profit. You would also want to compare your net profit monthly and quarterly. If you notice your net profit margin is not where you want it to be and your revenue goal was met, then it's time to evaluate your expense accounts. What expense accounts increased drastically in comparison to the previous month and why? Why did you perform well in one quarter or month and not so well in the other? Generally, your expenses will increase as your revenue increases. The goal is for your expenses to increase at a lower rate than your revenue. The last item that I review with my clients is their cash flow. Cash is reality. Cash is king, right? That's what they say. According to Forbes, 29% of small businesses failed because they run out of cash. You can have a very profitable business that generates a lot of revenue, but if you do not have the cash from the generation of revenue, you will not have enough money to pay your bills. You will not have enough money to pay your staff. You will start to run out of cash and you will have no option but to close your business. Now, it is important to note that a cash flow statement is not the same as a cash flow forecast. A cash flow statement digs into the past. Cash flow forecast looks into the future, and you should have at least 3 to 6 months of financial data in order to do a cash flow forecast. Now, looking at your cash flow statement answers where did my cash come into the business and where did my cash go out of the business over a period of time. It answers the questions, where did my cash go? So you're telling me that I made a profit of 150,000, but I only had 75,000 in the bank. Where did my cash go? You can start by analyzing your cash situation and start answering future questions like, do you have cash to achieve your goals? Do you have cash to succeed? Do you have cash to pay yourself, right? Owner's distribution. We're not working to just put money into our business. We want to get owner's distribution. We want to get paid from our business as well, right? You can start looking at your past numbers to make future business decisions and to meet future business goals. It is also important to point out that the cash reported on your cash flow statement at the end of a period is not equal to your revenue. These are two different things. This is because as a home healthcare provider, you should be using the accrual method of accounting, especially if you are part of some kind of federal or state program where you have to report your finances and be in compliance with the program, like Texas Medicaid for long-term healthcare facilities. Therefore, you are reporting your revenue as services are provided, not when the insurance company reimburses you. That is why it is important to review your revenue as well as your company's cash flow. Your end of month, end of quarter cash should reconcile to your bank accounts and savings accounts. I like to think of it as reconciling to your cash on hand. Having your records in order and reviewing them monthly can reveal a lot about how healthy your company is performing financially, and you are able to make any necessary changes before it is too late. You are able to evaluate your records to make sure that everything is on track to meet your end of year, end of quarter, end of month goals. If you're behind on your financial records or you are not sure how healthy your business is, let's hop on a 15-minute strategy call. My calendar is listed below. Please don't wait to the last minute. Wishing you much success in your business. Thank you. Bye-bye.